Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1681A, and today's date is October 4th, 2018, and the title of the episode is Panic, Fear, the IMF Sends Warning, U.S. Destabilizing the World. Let's get into the economic collapse financial news. Now, we are going to see big changes happening very soon. And I'm not just talking about the arrests, the military tribunals. I'm talking about the central bank. I'm talking about the takedown of this entire corrupt system. Because that's what we're really in right now, a corrupt system. And we've been talking about Christine Lagarde. We've been talking about the IMF. We've been talking about how they are panicking and how she's telling nations to resist self-sufficiency. Now she's come out with another warning about the global economy, that the U.S. is going to hurt the global economy. Well, really, the U.S. is going to hurt it. You know, what's happening here is that their system is breaking apart. They don't have an event to cover it up. They thought they were going to use a war. They thought they were going to use the tariffs, the tax plan, and everything else that Trump put into place. But they can't. It's completely impossible. Now, their message is just pure panic. And we're going to be getting into that in just a bit. Let's go through the economy right now. And we've been talking about retail. Retail is imploding. Now, think about this for a second. I know they're saying retail, it's on the move, it's recovering, it's going to be getting a lot better. Yesterday, we talked about bankruptcy and how many of these retailers are going down, how their sales are declining, they're not doing well, and it doesn't look good. Well, according to a new report from real estate research firm Reis, the U.S. department store vacancy rate rose to 9.1% in the third quarter, up 8.3% in 2017, and beating last quarter's rate of 8.6%. This is the highest since 2012. This is the highest since the Great Recession of 2008-2009 as it moved into 10, 11, 12. So the uptick can be blamed in part on the significant space once occupied by Bon-Ton and many, many other stores. Remember, Bon-Ton shuttered more than 200 locations this year when they went bankrupt. Sears, same thing. Radio Shack, same thing. Toys R Us, same thing. Brookstone, same thing. And right now what we're seeing is that mall vacancies, they are still rising. Yes, the mall owners are trying to make ends meet. They're trying to turn the space into something else, maybe a movie theater. Maybe they're trying to divvy it up and make smaller spaces so people can move in. But it's been very, very difficult for these mall owners because a lot of the people that want to start business, they're saying it's too risky right now. It's not a good time because when you see all these retailers falling apart, do you really want to go into the mall and open something up while other stores are closing down around you and the big names are dropping out? Remember, the malls run on the anchor stores, the department stores. Once those are gone, many of the people don't come to the malls. And then all of a sudden, the mall starts to deteriorate. And that's what we're seeing. We know right now that the central bank pumps up the economy into huge financial bubbles. And what we know is that they always pop. Today, we have a problem with pensions. The pensions are now investing in the market because they're trying to get that high rate of return. Remember, they projected out that they were going to get about 7 to 8% return on their investments. Well, with the interest rate so low, they can't get this. And that means they're losing money. So what do they have to do? They have to invest in the stock market to try to get those returns. And when we look back over time, this is where pension funds got into trouble because they invested in a bubble, the bubble popped, and then they were in trouble. Let's take a look at CalPERS, the California Public Pension Fund. Now, during the dot-com era, enormous gains in CalPERS stock holdings meant taxpayers' contributions were a modest $159 million annually. And when we look at bubble number 2, when it popped in 2008-2009, stock market gains had cratered, and as a consequence, taxpayers had to pay almost 4 times the CalPERS projection, $24.6 trillion. In a few short years, taxpayer contributions have nearly doubled, despite the outsized returns generated by bubble number 3, the largest of them all. By 2015, taxpayer contribution to CalPERS totaled $45 billion, even as CalPERS reaped huge gains in its stock portfolio. So what happens to taxpayers' contributions when all the asset bubbles pop? Well, the contributions go through the roof. And this is what's going to happen, because there's going to be a gap in the pension funding. And who has to make up the gap? The people. And when we look at the 3 stock market bubbles, we can see there were major problems. If we go back to the 2000s, that was bubble number 1. We also saw it bubble number 2 in 2008. Now we're in a bubble that is twice the size as 1 and 2. That's how bad it is. And when we look at this, we can see that this is not going to end well for the pensions. And we've been talking about pensions quite a bit because they're invested in the market. When the market comes down, it's going to be a total disaster. And when we start to look at the actual indicators, the actual real data, and we start to understand what's going on here, we understand how the central banks create these bubbles, why they do it, and why they pump them up and then let them fall. Because they make money all the way up, because what they do is they pump up the bubble, they pump it up in real estate, they pump it up in the stock market, they pump it up everywhere, and they make it look like, wow, this is the place to be. Then the retail investor comes in, those house flippers for housing, those people in the stock market who say, hey, this is easy, I can make a lot of money doing this. I don't even have to do anything. I just put some money in, purchase a stock, couple days, couple weeks, couple months later, all of a sudden, I have to sell it. Then I buy another stock, and I keep doing the same thing because the market keeps going up. Same thing with housing. So what they do is they pump it up. They get everyone excited. Everyone gets in at the top because that's when they realize this is a great thing. Those insiders, the central bank and those people that were helping pump up these bubbles, they get out because they know the market's going to come down. So what they do is then they bet the market coming down. So they make money going up, they make money going down. Who loses out? Pension funds, the retail investor, the house flipper, those people who bought at the highest level. And they do this on purpose to maintain control, to make themselves very, very wealthy. And this has been going on for quite a while. Well, it's all about to end. Why do I say that? Well, Jerome Powell was speaking at an event at the Atlantic Festival in Washington. And the Fed chair took the opportunity to underscore just why he remains so complacent about the U.S. economy, saying it's a remarkably positive set of economic circumstances, and there's no reason to think it can't continue for quite some time. Now, Powell did hint that he will keep hiking rates for the foreseeable future. And we know when the Fed does this, this is a catalyst that will ultimately crash the market. We know that this is going to happen. So when we look at the Fed and when they tighten their cycles, their tightening cycles, we can see at each point where the entire economic system falls apart. If we go back in history, the 2004 to 2006 Fed tightening looked benign, but the U.S. housing collapse set off a contagion and a near collapse of the global financial system, dwarfing all post-war crises. The late 1990s, the Fed was tightening. Then they stopped tightening. And while they were stopping their tightening, we saw the Asia crisis. We saw the LTCM and Russia collapse. And when the tightening resumed, the pop of the equity bubble. The early 1993 to 94 tightening phase included bond market turmoil and the Mexican crisis. The late 1980 tightening ushered along the S&L crisis. Greenspan's first fumbled tightening in 1987 helped trigger Black Monday before the Fed eased and the Greenspan put took off in earnest. The early 80s included the LDC, LATAM debt crisis, and Conte, Illinois collapse. And when you look at the graph, you can see throughout all these years when the Fed tightened, and they began to tighten, a couple years later, 2, 3, 4 years later, all of a sudden, everything started to fall apart. And no one realizes this until it's too late. Actually, sometimes they don't even realize it at all. But when you can see the pattern, it is perfectly clear. So, Powell, as we know, is not going to let up on raising the interest rates. He said if the economy weakens, the Fed will still increase rates, only a little bit more slowly. And that's very interesting because if the economy is going to weaken, why would you continually raise rates? He didn't even say anything about cutting rates. I mean, previous to him, when we had other Feds, they said, listen, if we enter an economic crisis, this is Yellen, we might have to go to negative interest rates. He didn't even mention it. So rate cuts, it looks like they're off the table. What's on the table is the speed of rate increases. He was asked, what keeps you up at night? What are you really worried about? Are you worried about another financial crash? Powell said, well, the next set of problems wouldn't look a lot like the last set of problems we had. It would be something else, a cyber attack, some type of global event. And then he threw in the zinger. Or maybe it will surprise us and look exactly like the last one. He's letting us know that this system is going to be coming down. And everyone might think that Powell is in line with the main central banking system, but from what Christine Lagarde is saying, it seems like he is not. So the IMF is out there and they're warning the world that we might have a major problem. Actually, not might. We do have a major problem. They said debt is above 2008 level, and a failure to reform banking system could trigger crisis. The world economy is at a risk of another financial meltdown, following the failure of governments and regulators to push through all the reforms needed to protect the system from reckless behavior. This is coming from Christine Lagarde. With global debt levels well above those at the time of the last crash in 2008, the risk remains that unregulated parts of the financial system could trigger a global panic. Much has been done to shore up the reserves of banks in the last 10 years and to put in place more rigorous oversight of the financial sector, but risks tend to rise during good times, such as the current period of low interest rates and subdued volatility, and those risks can always migrate to new areas, Christine Lagarde said, and she went on to say, supervisors must remain vigilant to these unfolding events. Lagarde said she was concerned that the total value of global debt in both the public and private sectors has rocketed by 60%. Really, she's shocked about that. Their whole business is debt. This is what they do. They don't spread around wealth. They don't spread around prosperity. They spread debt. That's all they do. And she went on to say, in the decade since the last financial crisis, we reached an all-time of $182 trillion worth of debt. She said the buildup made developing world governments and companies more vulnerable to higher U.S. interest rates, which could trigger a flight of funds and destabilize their economies. This should serve as a wake-up call. So what is Christine Lagarde saying right now? She's saying that the U.S., with their policy of raising interest rate, is going to destabilize the world economies, actually destabilize their system. Because think about it, the ECB and the rest, they're at zero or negative rates. The Fed, they are raising rates. And we just discussed what happens when you raise rates. Christine Lagarde is telling the U.S., this shouldn't happen. The U.S. needs to stop this because you will destabilize the entire world. The system will crash if the U.S. continually raises interest rates. Well, why doesn't Powell just listen? Why doesn't he stop it if he's all part of the central banking system? He doesn't even mention rate cuts because what they're doing is they're preparing to take down the entire global system. I mean, a lot of people think that Trump, the Patriots, they were taking down just the deep state. Those people that make headlines, like the Clintons, like Comey, like McCabe, this goes much, much deeper. They're planning to take down the entire system. Of course, those people in the background, nobody knows about them. If you ask people on the street, what does the Fed do? What's the central bank? What's the IMF? No one really knows about it. Nobody even cares. They know. They know what they do. And to stop the corruption, to stop these people, they've already planned this. The plan is in motion. And it's going much, much further than taking down these few select people. Yes, it's important to take down these few select people, but it goes much, much deeper where they're going to take down the entire system because the system that we're in is not a people system. And Christine Lagarde, with her warnings now, I mean, they're coming out crazy and fast, where she's saying that everyone must resist. Nations should not like self-sufficiency. It's not good for you. She's blaming the U.S., that the U.S. is going to destabilize the world with raising the interest rate. And the central bank, they're kind of stuck right now. Because what do? Because once the rate hits a certain point, it's going to trigger a domino effect. And it's going to start to hit all over the place. And the global economy is very, very weak, a lot weaker than people think. And the whole system is going to come down. And we're going to hear Christine Lagarde and probably the head of the biz come out, and they're going to start to panic because they already see what's happening. The biz already started to panic. But you could see that they're going to get very, very nervous. Fear is going to set in. And you're going to hear a lot more about this. And this whole thing that we're watching right now, this is about taking down the entire global network of the deep state and the central bank. That's what is in process right now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.